Welcome to the FIsionaries podcast, sponsored by Alchemy. I'm your host, Jim Maroos. The FIsionaries podcast shines a light on financial institutions at the cutting edge of digital transformation, providing you with the tips and tricks to elevate your digital game. When consumers are looking to find the best rates offered on savings account, they usually use Google and come up with NerdWallet or Bankrate.com. The problem is that this search results are biased, influenced by advertising and affiliate dollars. To respond to the need for a more unbiased source of the best savings rates nationwide, Seattle Bank created CD Valet. This offering allows consumers to search for the best rates as well as being able to use filters to meet their individual savings goals. My guest is John Blizzard, President and CEO of the $800 million Seattle Bank. We discuss how a community bank can support an innovative culture across an organization, making an impact well beyond geographic boundaries. So, John, before we dig into what's happened to Seattle Bank, can you share with our audience a little bit about your career background and how your various roles may have prepared you for the journey that you're on today?
Thanks, Jim. Sure. Yeah, I have various financial services areas I worked in banking, and been very interesting. They started out as a teller, like so many people in banking did, right? Working the teller line. I don't even think they call it a teller line at most banks anymore, but did that for Credit Union Oklahoma, and eventually became a consumer lending officer and did boat loans and car loans and HELOCs and credit cards and all that fun stuff, and eventually became the manager of that area. And then, like I noted, I was in Oklahoma and decided, hey, it's time to go west. So 30 years ago, I came to Seattle, and my buddy got me a job at a mortgage company, and Seattle Mortgage Company, where I was owned by Seattle Bank. So it's our predecessor firm. And I worked there for 7 years doing the mortgage banking thing in the 90s, which was a ton of fun. A lot happening back then, and just great time. But then I was like, hey, I want to get more into the finance part of the business. And so I had this opportunity to go to the Federal Home Loan Bank of Seattle. And the FHLBs, a lot of people don't know a ton about the FHLBs, but they loan money to the banking system. Been in the press a little bit here recently. So worked there with a number of banks, credit unions, and eventually became the chief banking officer there, in charge of all of our lending to 400 financial institutions, from the very biggest to the smallest. And that was an unbelievable experience, Jim, to work with a lot of different financial institutions with a lot of different strategies, some commercial, some consumer, some mortgage focused, some others, and worked with probably 100 CFOs, if not more, during that time, and deep into interest rate risk management and ALM and all that good stuff. And so that was just a tremendous experience to look inside banking as a business and see how these different banks operated, right? And some, as we saw in the great financial crisis, took more risks than they should have. And we also, even before that, we had, hedging blow up at different banks and stuff around interest rate risk management. And I saw great managers and great leaders. And so that was a really tremendous experience that I don't think a lot of people have the opportunity to have, to really see inside banking. And so did that, and then transitioned from there to get back onto Main Street, and ran a bank for a couple of years out of Idaho, and then got pulled back to Seattle Bank. And in 2014, been here ever since. Again, I was here when it was a mortgage company for 7 years, and so my second stint here. And I would say, hey, in terms of how that's impacted me, first of all, very diverse areas, right, of banking and financial services. And learned a great deal from great managers and terrible managers. By the way, you learn as much from the terrible managers as the good ones. And just seeing inside, was always super interested in kind of, hey, how can we tweak our products? How can we be more relevant to customers in all those settings? So I was always pushing the envelope to do new things and different things. So it's kind of always been in the blood.
It's funny because in my background, I also started in a management training program. So I started as a teller, moved up to manager, assistant manager, consumer loan officer, then in the marketing department of a fairly large financial institution. But since that experience in banking, when I served banks and in the agency side, I got to see all kinds of things about how financial institutions worked, what strategies worked, what didn't work, what leadership styles worked, what didn't work. And working for the Federal Home Loan Bank Board, it's very interesting because, as you said, you got to see all kinds of things. You got to see how people manage risk, how people's overall business strategies differed, how much financial institutions were the same, and how organizations could differentiate themselves. And so, really, when you got back into, as you call it, Main Street banking, it really gave you an opportunity to say, okay, I got to test out some of these ideas I've had, but still not forget about the foundations of banking, which I think when we look at fintech, for instance, when we look at small, very fluid, agile organizations, it gets down to leadership, but it also gets down to, do you still understand the basics of banking? You can't let that go between risk management to leadership styles. And a lot of people say, the thing that plays out the most importantly today is what kind of leader are you going to be? Because at the end of the day, the success or failure is going to fall on your shoulders. One of the things we opened this whole podcast with was the fact that you've done a very interesting innovation with something called the CD Valet, which really looks at offering a CD marketplace for institutions across the country. So what was your vision when you were building this, and why you extended beyond what I'd call traditional offerings? What was the rationale for creating the CD shopping tool that didn't have a really typical revenue model?
Well, do we have 2 hours, Jim, to talk about this topic? Because this is near and dear to my heart, and something we are very excited about, having a ton of fun with, and engage with, because the consumer experience out there sucks. It's terrible. We have a broken market. So many things you can go online and find what you're looking for, your options pretty easily to shop, right? But lo and behold, the CD market is really not great for buyers, those who invest in CDs. And it's really not great for sellers, except for the very largest sellers. So your community banks and credit unions have a very difficult, very expensive time competing for CDs. And there's reasons for that that are pretty interesting. But we totally stumbled into this market and just realized, first of all, there's just a huge consumer here that invests a lot of money in CDs. It could be at one bank or multiple banks. And that was an early finding of ours, kind of being naive in this business, going back almost 10 years ago, for me anyway. And I was like, wow. And these are really like millionaire next door types. These are not folks that invest a ton of equity. They're very conservative, but they save a lot of money. They are savers. And the banking industry does not serve those savers very well. Of course, we all have savings accounts and money market and checking accounts and CDs. But we used to, Jim, call it hot money as a very negative, that these great savers somehow were bad because you gave them a decent rate on their money. We just view that totally different. Like, how can we serve that customer base? And the reality was, we go online, you can't find all the rates in one place very easily at all. So we had customers shopping all over the place online to try to find good deals. And then the marketplaces that exist and existed back then didn't even pick us up. Jim, we had one of the best rates in the country. One of our fellow banks that we know had a different term that was also one of the best rates in the country. This goes back when we had some accelerated growth. Didn't even show up on the marketplaces. So nobody would even know we offered that other than our nice little ad in the newspaper, right? And so we're like, what the heck? We're not even showing up on some of the big marketplaces. It's like, because we are not, their goal is not to show you the whole market. Their goal is to sell you on clicking ads.
Where's the money? Exactly.
Yeah, exactly. And so I kind of view those as first generation marketplaces, and consumers know they're terrible, but they don't know what they're missing, right? Unless there's an alternative. So let me give an example of CD Valet versus like Bankrate, for example. This a couple weeks ago. And CD rates, individual CDs of 5% or more. And on Bankrate, it was like 17 individual CDs. You know how many we had on CD Valet, Jim?
No. How many?
Over 225 CDs.
Oh, my gosh.
So more than 10 times as many. And I think it's even higher today. Well, that's from a whole bunch of community financial institutions that would love to do business. But the word does not get out. We've even had phenomenal rates on there of like 6%. Have you seen a 6% CD?
No, in fact, we were just talking about the fact that you found, I think, or 5.75, and so now I got to up that. So yeah.
That's right. We had a couple that were 6% for a while. And so, but the reality is the way the market works today is if you're a relatively small or even medium sized bank, you can do the old school newspaper. But let's face it, that audience is shrinking. But if you want to compete digitally, good luck. It is ultra expensive. It is very challenging, and you're going to have a hard time winning business because you have very sophisticated players. These marketplace providers are superb at managing that market and winning, and buying their way into the highest ratings on Google. Same with your big internet banks. So you just have a huge disconnect between the two. So now through CD Ballet, we offer rates from 2,500 institutions and 17,000 different rates. We update weekly. 17,000. That's just CD rates of financial institutions around the country. It's bar none the best database anywhere in the country. And so that's phenomenal. So we want to help the financial institutions get exposure because we know from the CD customers, we're in this business every day. We know that those CD customers, a lot of them would prefer to do business locally. They just don't know about that great deal locally. And they go online, they really don't find it unless they know what institution to pull up. So we even looked at advertising or trying to be on these big marketplaces. There was no interest. They're not built for us. The cost was astronomical if you could even get on there. So really, we're blocked out. So we're going to team up with other community institutions that want to kind of disrupt this business from within a little bit and deliver something better to consumers.
Okay, so back when I was a banker in marketing, I had to do shopping studies on a weekly basis to find out what the deposit and lending rates were for my competition. That was not an easy process. How in the world do you collect 2,500 organizations' rates weekly across the country?
Yeah, so we have people who do it daily. We don't have anybody doing it all day because nobody can do that, right? But it's a combination of technology and great people and systems and processes. And so it's pretty remarkable what we've built. We started with 5 states, and over a few months, we managed to move that to the whole country. And so it is a process. We've got some great technology in there, but we're not doing screen scraping. That does not work. And some of those things, some of those fancy ways. So we do have human beings helping ensure quality and that we get those rates.
Okay, so the obvious question is, what's your why? Why are you doing this? I understand you're trying to serve the customer, but there's got to be a deeper why.
Well, first of all, there's a lot of financial institutions just like us that were having to spend a lot of money to compete. They weren't able to raise as many CDs as they wanted to. As fast as they wanted to, right? So we would eventually win enough business, even though we had great rates. But it just took longer than it should for an efficient market in 2023 with the internet and iPhone, right? This is just taking too long. So, we really think there's a way to benefit ourselves and everybody else. If we take the funnel of Seattle Bank's current customers of CDs that are a few thousand, and we expand that to be hundreds of thousand potential customers, maybe millions, we're going to get our piece of that business. So making the funnel way bigger is going to serve us long term. We can disrupt from within. We are tiny relative to the whole market. Jim, you know how big the retail CD market is?
Not a clue.
It's about $1.5 trillion. And so people don't realize this is as big as the auto loan market, the student loan market, the credit card market. This is a massive market, and that's retail. You also then have brokered CDs, which is on top of that. And so you just have a massive market that bankers have really shunned for years, because it was high cost funds, right? And so they've never liked this business for the most part because it's been considered high cost funds, hot money, and all those things, which made us love this business. And we've been basically looking and working on this for 7 years. We're just now, really getting into market nationwide. But our first business plan on this was 2017. We did a pilot with our customers over COVID. And so we've been committed to this for a long time. it is a very big market that we can make work way better for consumers and financial institutions.
So it really makes it so that you can really make your funding model even more efficient, because by having this seamless platform, you can then build a funding model that's going to cost you less because you have a wider audience that you can reach, but more effectively make it very efficient, where you can drop your overall cost of funds, but you can manage it on a moment by moment basis if you have to. You can be the biggest and best, but you're also going to you're going to be able to build a model that says, okay, if we fall in the number 25 to number 50, we're going to generate this much a week, correct?
Yeah, well, a couple points. One, when you talked about, hey, when you were earlier in your career and you would go do rate surveys and stuff, guess what? Everybody has people doing that. Every single bank, credit union has people on their team doing this. We have amazing amount of data on the market, on consumer behavior in this space. The data we have is ridiculous, and that's going to give us tremendous insights to, help those that are involved in CD Valet, and just knowing what's going on in that market. So that's really important to us.
Well, it's just the fact that this makes it so that you can actually lower your cost of funds because you have a wider audience of who you're hitting with the rates that you set, correct? I mean, effectively.
Yeah. So if you think about it, a really inefficient market, when it becomes more efficient, the high rate payers pay less, the low rate payers pay more. So for us, we're a higher rate payer. So I'm like, hey, that does us zero harm. Actually, over the long term, it's going to bring our costs down. And so we think, the ability to raise that funding in the CD business is going to be much more dynamic. And so a bank or credit union that wants to raise 50 million in CDs should be able to do it a lot faster, right? If you have a really attractive, say you do an 18-month term, 13-month term, bump CD, whatever, you make it really attractive to those consumers, and maybe it's just in your geography or something, you should be able to raise your funding very fast and not have to drag that out over months and months. If we bring that audience to you, you ought to be able to do that. So that is going to change the dynamic and help certainly the financial institutions with their funding.
Well, as I was kicking the tire to CD Valet, I also noticed, and I don't know how this compares to the other platforms, but it seemed like it was a much more consumer-friendly platform if I had a funding, a savings goal. So let's say I had $1 million to save, but I wanted to have it at different terms. And you provide a lot of tools to get the consumer to where they want to go efficiently, don't you?
We do. We have a portfolio tool where you can put all your CDs in and watch those in one place, and the maturities and so forth. We also have a refi tool. Think about this. How many people do you think missed out on refinancing their house during COVID when rates are really low? That'd be a few, but not many missed out on getting the low rates on refinancing their house. People are very accustomed to refinancing their house. They're not on the CD front. When rates rise rapidly like this, there is so much money at the big banks getting paid 20 basis points. Even if it's locked in for 2 years and just rolled over, pay the 90-day penalty, which would be nothing, and put it in a 5% CD. It's a no-brainer market to refi hundreds of billions of CDs out there and put money in people's pockets.
You become a CD concierge as well that way.
Yeah, there's just so many ways we can deliver value to customers, and it's an easy product to understand, and it's a lot of fun.
So obviously, there's been a lot of discussion recently around risk management and the ability to match maturities against deposits and loans. There's also been a lot of discussion around deposit insurance. How do you deal with those consumers around the $250,000 limit?
Well, first of all, CD Valet and CDs in general, the CD market is definitely gotten the attention of bankers who are like, hey, it's term funding. They're almost always FDIC insured. That is great funding on the balance sheet from that perspective. At Seattle Bank, we've always worked. We have businesses, high net worth individuals in our private banking area, and we've worked for a long time in maximizing their insurance on FDIC. Through titling. A lot of people don't know, hey, if you have a couple, you might be able to get $2 million of insurance. And so we've done that forever. So that's just normal course stuff. And then with bigger commercial clients that have a lot of cash, we've always worked with IntraFi and their ICS and CDARS products to get insurance on up to $150 million. And so we would frequently do that. And certainly we got more of that from the recent kind of scares with SVB and so forth. But in general, we were just built for that. So we did a lot of work in the most recent time here to help more customers navigate that. But we're 80% insured deposits. It's a very high number relative to the industry. And that's because we already cared about our customers and helped them navigate insurance even before all this chaos. I will say, Jim, we're up 16% in the quarter on deposits, retail deposits. That's not annualized. That's in the quarter. And, and so I think our business model of being a higher rate payer and being you mentioned kind of interest rate risk and risk management. It's not just the deposit side, it's what you do with the money. And a lot of folks input, and I can't tell you how many times I had, lenders talking about a 3.5% or 4% multifamily loan that different banks were competing on. And like, hey, we're just not going to be in that market. We got to find other deals where we can add value and get paid, because at the bottom end of the market, when you book so many assets, either buying investments or booking loans, that's when you got to be disciplined when it's in the good times.
Well, it's interesting too, because the efficiency of what you do. The digital world provides you an amazing capability to build these efficiencies to make it so that you can match perfectly if you do it digitally. You can shop digitally, as you're doing with CD Valet. CD Valet had a starting point, and that starting point really goes back to building a culture of innovation. You had to have somebody or a group of people that said, we're going to do this differently. Traditional financial institutions talk about building a culture that supports innovation and transformation. Yet, as I find, very few organizations go beyond talking the talk. They have a hard time walking the walk because it means doing banking different. It means changing. How have you, as a leader, set the platform for your organization to think outside the box, to test new ideas? You mentioned in our pre-call that you've gone through a major core transformation, core conversion. That is innovation, because it means taking a big commitment to something that's beyond the norm. How do you personally set the stage for this?
Well, I think it first starts with like, hey, who's your owners, or whether you're public or private, and your board, and what was the premise that you came in the organization under, right? And so we're privately owned, which is a great benefit these particular days with the crazy stock market. But we have a lot of entrepreneurs, a lot of business owners, and that totally up for us doing something different. We also had a bank that was recapitalized, so there was kind of a fresh start. So I came in after the years of some cleanup that happened. So it was really a great environment for me to come in and say, hey, we got to get out of the branches. We got to be digital. We got to be focused on some larger accounts, and we got to find a way to add value through technology and great people. And so, we've pursued that and had total support of our board and shareholders, which has been key. But then the implementation of that it's all through who you hire, what the expectations are, what's your goals, what's your incentive plan. We're all under the same incentive plan. I have the same plan as our folks that take care of customers on the front line. In terms, we have the exact same goals. And so, so we don't get, sometimes companies just get themselves all in knots by confusing the message for their teams, even in incentive plans and so forth. And so, hey, this is banking. There's tons of risk, Jim. And if we need to pull the plug and not do loans or not do a project because there's too much risk, we're just going to do it. We don't need anybody confused that goes against their personal goals, right? So, we really have a collaborative culture here. It's very important in our hiring. We don't have a lot of alphas running around that want to own the place and be a winner at the expense of a fellow employee. I think we've all been in those environments where you have competing employees. We have an extremely collaborative group, and they just feed off each other. It's amazing, and probably relative to banks our size, we hire kind of a higher cost employee that does more complex stuff. So it's been a ton of fun. Hey, it's work every day. We're in the risk management business, and it's also about deciding what you're not going to do and not going to pursue, so you can be focused on what's really valuable.
It's interesting. You say risk management, and a lot of organizations talk about risk management, but really under the surface, it's risk avoidance. I mean, you've seen in banking, you saw at the Federal Home Loan Bank Board that there are some organizations that no matter what goes on in the marketplace, they won't take risk, which is not a good business model because it's about managing risk, not avoiding all risk. How do you balance that as an organization? How do you balance risk management versus risk avoidance in things such as the way you fund things? But beyond that, in the type of technologies you implement and the type of core conversion you've done, how do you manage those things?
Yeah, well, hey, you just have to understand, and as you stated, banks are in the risk management business. First and foremost, we have lots of risks everywhere, credit risk, interest rate risk, operations risk. It's regulatory risk, all sorts of stuff. And that is a huge part of culture too, right? Is that risk. We're very transparent all the way around about any risk that we're taking or see. And we are constantly improving our operations and everything because we're constantly identifying areas where we can do better. And that's it. It's not about, hey, we're perfect. We don't need to work on anything. We are constantly working to be better because this is a complicated business with a lot of risk. And so, I would say, hey, you got to have a tolerance that you're going to be wrong, especially on innovative stuff. Hey, some stuff's going to work, some stuff's not. If it doesn't work, it's on me, no problem. And nobody's getting fired over something not working. Everybody's got to do their job, of course. But and I tell our team, like, hey, I have no idea if this product is going to be a grand slam or a dud. But we're going to do it, and we think it's a really good idea, and it serves customers well. And that's worked really well for us. That we have, we've done a lot of innovation, and we've taken the hard steps to get there with the core conversion, which you mentioned. Just the hardest thing you can do in banking is convert your core technology stack, and that's just been transformative for us, but a hell of a lot of work by the team. But risk management's just in our blood. Like, hey, at the low end of the market, when rates were in COVID, we took out a bunch, a small amount. We should have done more probably. Some brokered CDs at sub 1% money. That looks pretty cheap right now. Just a hedging strategy of interest rate risk, right? So we never think we're smart enough to know the future exactly. So we're always looking, how can we, add another layer of hedging or risk management?
We discussed the fact you've done a core conversion. You had to have partners that help you implement the CD valet. How do you select what technologies to implement? And more importantly, how do you select third-party partners and collaborators that you work with? How do you select who those are going to be?
First is just identifying those that are out in the marketplace and who's offering what. So we're active in the fintech conferences and out in the environment, know a lot of people. And so we generally are well aware or can find out through a few calls, including maybe you, Jim, like who's offering this particular service and really vetting them. We have a long experience in vetting third parties. It's huge to all banks. And we've learned in the last 5-10 years, working on different things that worked and some that didn't, about the kind of partners we need. And they have to be super focused on they're in the banking business and compliance and risk management on their end. Cybersecurity is huge, and PII and all those things are key. And then they got to have great technology that works, and we got to be able to plug it in and monitor it and oversee the vendor, if you will, the partner that we're working with. We saw there was a lot, especially in the last 5 years, there was a lot of not ready to be prime time companies out there. Fintechs, we love all the entrepreneurs, so don't get me wrong. We love what they're trying to do out there, but a lot of more features, not companies. And, we have to work with real companies. They can be small, but they have to have a real, eye towards compliance and risk management. And we've found some great partners.
So what innovations beyond CD Valet have you introduced to Seattle Bank that is making digital banking better for consumers and for small businesses and for entrepreneurs?
Yeah, so some of the things we've done is, we implemented the early pay for our customers that have their paychecks, deposited here. So we did that, I don't know, a year or two ago. We implemented a personal line of credit. So if you're a high credit worthy customer and have a certain kind of checking account, a digital checking account with us, you can get a personal line of credit. It could be $100,000. And so we're one of very few banks in the country that offer that. It's actually technically really difficult to implement that. And so our team got that done. And again, that's maybe, I don't know, 4 or 5 banks in the country even offer that. So we got that done last year. And so, and those are the things just on the traditional side of the business.
So personalized credit, do you offer that for every new checking account customer, or how do you offer that?
Yeah, if they qualify, if they have our digital direct account and they qualify, it's down. And by matter of fact, I think ours goes down to the lowest level that anybody offers it, down to $15,000 in size. So we try to serve as broad a market as possible with that product. And that's been a pretty cool thing to do. Really hard. All this stuff's hard, right? And there's the orchestration of your tech. But the great thing about our core conversion and being cloud-based, API enabled, and having a partner that lets us hook in with third parties, it's pretty cool that we can make those things happen, given our size.
It's interesting because I worked with a bank in Poland, gosh, it got to be 7, maybe 10 years ago now, that built a small personal loan for everybody who opened an account. So basically they said, unless the person looks like they are completely non-credit worthy, which why did we open a checking account for them? They put an amount on the person's mobile banking app that they could tap into at any time. I believe it was as low as $100. But the reality was they realized that would stem attrition, because if a customer was ready to want to close their account, they'd try to go someplace else and get the same line of credit, and nobody would offer it to them. And so all of a sudden they continually see this. So your line of credit idea is extraordinarily powerful, especially with the bigger depositors that you have, and it's a cross-selling tool. You're dealing with, as you mentioned earlier, some people with a lot of money, and between the CDs and with the checking account and now with the line of credit, it really provides a real nice portfolio of services that all play off of each other, obviously. When you're trying to innovate, do you have any preference for a build versus buy mentality versus a partner mentality?
We really are. We're builders. We like to do stuff ourselves, maybe to an extreme. Sometimes we're not big on hiring consultants and doing those things. We like to be hands-on. We love to partner with awesome third parties. We're just not in the acquiring game. We would if the right situation came along. The buy game. It's just it's never as easy as the financial engineers make it sound, right? Oh, you just buy this thing and plug it in, and it's like, well, you got culture, you got technology, you got all sorts of stuff, people you got to deal with, so we're a build and partner shop.
So it's clear that your organization has a challenger mindset, that you're always trying to find those avenues of opportunity that are out there in the consumer market, in the small business market, but just overall saying, we're going to challenge what's traditional, what we consider traditional banking. How do you keep up with market changes and the expectations of the marketplace? And how do you keep employees in the loop? How do you keep them aware of what's going on around them to keep that mentality in their minds? And how do you hire for that? You mentioned a little bit about the hiring aspect, but I know some of your employees, and obviously you're searching to hire the people that have the same mindset that your organization is trying to have.
Yeah, definitely. We've hired some great talent. I will say, hey, one thing, we came back to the office very quickly. The stuff we do is hard. It requires a lot of collaboration. We are mostly in the office. And by the way, we took down new space in downtown Seattle in the middle of COVID and got beautiful space that is just phenomenal for our employees to work from, and views. And we got a great deal, which is always important. So creating that environment. We're small. We're mostly all here. We have all employee meetings once a month. We're very transparent. We're private, so we can be extremely transparent with our team, and that seems to work really well for us. And to do it that way. So, yeah, the people front, we have lots and lots of opportunities after COVID being pretty strange hiring environment. We are seeing a lot of talent opportunity right now. Of course, on the West Coast, you've just seen some big banks struggle. So that's going to go very well for us for a while. But hey, folks mainly want to be here doing cool stuff, right?
Yeah. And when you tell your story, I mean, that's how I found out about you. When you tell your story, It's intriguing because it's not the way you view banking. It's not. It's doing something different. I mean, again, the CD Valet. I'm saying, geez, this is something that's for the marketplace. Yes, it serves your individual organization's, needs, but it's a completely different way of looking at how to get to the finish line. Something that most institutions could never put together. It's bigger than a bread box. As you look to the next 1 to 3 years, what are some of the aspirations, some of the things that you want to see happen at Seattle Bank, without giving away too many secrets? But what is really things that are on your to-do list?
Really, I just look at, hey, are we delivering value to customers? And maybe it's multiple segments. And are we doing a really good job of that through our partner banking, through CD Valet, through our boutique bank? And how does that look? Do we have like really happy customers? And are we operating a business that's sustainable and to keep growing that business over time? There's a lot of things you can do that are not sustainable in banking if you give the farm away, right? But are we doing things sustainable and have really happy clients and have something we can grow? And that's really how I look at it. I'm not looking at a certain amount of growth rate or any of those things. It's like, hey, are you relevant to a certain customer group? That's what really matters. If you as a financial institution are really relevant and can find a way to do that and get compensated appropriately to stay in business, that's pretty good. That's pretty good stuff.
What keeps you up at night? What challenges your vision?
Well, Jim, I have 4 teenage boys, so I got a million reasons to be up at night. I think for me and a lot of folks in banking, the cybersecurity stuff is it's just always top of mind. And then I care about our people and make sure that they're doing well and working well together, and think a lot about our people.
And finally, as you mentioned, you spent a good amount of time at the Federal Home Loan Bank Board, where you really got to see a lot of different organizations, a lot of leaders, a lot of strategy, a lot of business models. It also gives you an opportunity to be kind of like a visionary to a degree to those organizations that continue to do things as they've always done them. What recommendations would you give banks and credit unions as they attempt to become more future ready?
Well, great question. I do think of myself more of a student than a teacher, Jim. So I'm usually
That's always going to help. Exactly.
I'm not usually the one out there saying I know it all or anything. But if I were to give some advice on that front, would be, hey, don't chase the fads. There's a lot of fads, especially around technology, and just find where you can add real value. I mean, community banks and credit unions can find these niches that are not well served, that the big banks just can't operate in for lots of reasons, and just go find those and do something awesome for those customers and be relevant, and you'll do great. Just be careful of the fads, because there's a lot of hype around the latest and greatest whatever. So
it's interesting too, John. You mentioned it just in passing, but it really stuck in my mind that your organization also, as you try a lot of new things, you're not afraid to fail. You said yourself, you'll take that upon yourself. I'll take the blame. But bottom line is, organizations sometimes overthink things so much to try to make sure that they don't fail, that a lot of great ideas get left on the cutting room floor, as they would say in the past. But I think it's another thing that organizations should look at, if they look at your organization, is not everything has been a success. But that doesn't mean we don't want to do it, and you're not afraid to turn it off. We had a conversation a few weeks ago with Coastal Community Bank, and I think what was interesting is they also said, we don't succeed every time, but we're not afraid to fail. We try to avoid it, but we are not afraid to turn something off if it's not working. That's a really big leap from what I would consider to be traditional banking, and certainly the banking that you saw when you were a teller, I'm sure. In fact, as a teller, if I remember correctly, when I was a teller, you had a better likelihood of getting fired, not by not selling, but by not balancing. And that was to the penny. And while you weren't allowed to do it, you always had a little change on the side so you could get out of the branch, knowing that maybe 2 days from now you're going to bounce it the other way for a couple dollars. But boy, I'll tell you, that is the mentality that you go. You don't think that an Apple or an Amazon or a Fairmont Hotel is saying, geez, if you make a small mistake, you're not going to be able to leave the office that day. It's just crazy. But John, thank you so much for being on the podcast. I really appreciate it. And you really did provide a lot of insight into a small community bank that's doing just amazing things, punching above your weight. So I really appreciate the time you spent.
Thank you very much. Really appreciate it, Jim.
Thanks for listening to the FIsionaries podcast. We hope you enjoyed our deep dive into all the tips and tricks you can use to help elevate your digital game. If you enjoyed this episode and would like to help support the podcast, please share it with others around you, post it on social media, or just leave a thumbs up and a comment. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Hassage, audio engineer, Sean Roll Hoffman, and video producer, Will Pritz. I'm your host, Jim Roos. Until next time, remember, an innovative culture is not defined by the size of the organization, but by the willingness of leadership to embrace change and take risks.